The morning of March 22, 2018, began like any other trading day on Wall Street, but within hours screens across America flashed red as President Donald Trump announced sweeping tariffs on steel and aluminum, and investors felt a sudden chill. In that momente, trade dispute turned into a global economic drama, and millions of everyday investors realized their money was now caught in the middle of a political storm. Trump stood at the White House podium and declared that unfair trade had weakened American industry for decades, and he promised that tariffs would restore strength, pride, and jobs. Behind those powerful words stood a risky economic experiment that would shake markets, test alliances, and create both winners and losers. Within days, the Dow Jones Industrial Average plunged, wiping out billions of dollars in market value, while nervous traders searched for clues about what would come next. Across the ocean, leaders in China, the European Union, and Canada prepared swift retaliation, signaling that this would not be a short battle. In Beijing, President Xi Jinping's advisors calculated countermeasures, targeting American agriculture, automobiles, and technology. Soybean farmers in Iowa watched prices collapse, while steel executives in Ohio celebrated rising demand and higher profits. The same policy that lifted one sector crushed another, revealing how deeply trade wars can divide economic fortunes. By mid-2018, companies like Harley-Davidson warned that tariffs would force them to raise prices or move production overseas. At the same time, U.S. Steel announced new investments and rehiring plans, showing how tariffs could fuel domestic revival. Investors faced a confusing puzzle, because the same headlines carried both hope and fear. In 2019, tensions escalated further when the United States imposed new tariffs on over $300 billion of Chinese goods. China responded with its own sweeping measures, and global markets trembled once again. Apple, heavily dependent on Chinese manufacturing, saw its stock swing wildly as analysts debated the long-term impact. Tech giants like Intel, Nvidia, and Qualcomm braced for supply chain shocks that could disrupt innovation. Meanwhile, small businesses across America struggled with rising costs, as imported components suddenly became more expensive. Families noticed higher prices on everyday goods, from washing machines to electronics, turning trade policy into a kitchen table issue. By late 2019, uncertainty slowed business investment, and economists warned that prolonged tariffs could drag the U.S. economy into recession. Then came early 2020, when global supply chains collapsed under the weight of a pandemic, magnifying the effects of the trade war. Factories shut down, shipping routes froze, and the fragile balance of global commerce cracked. In this chaos, tariffs became both shield and sword, protecting some industries while deepening shortages in others. By the time Joe Biden entered the White House in 2021, many tariffs remained, proving how difficult it is to reverse such policies. Yet the political legacy of Trump's tariff strategy continued to influence debates on national security, manufacturing, and economic independence. In 2024, as Trump prepared for another run at the presidency, investors again began to calculate the impact of renewed trade battles. Markets remembered the volatility, the sudden sell-offs, and the unexpected rallies. Wall Street analysts warned that a second wave of aggressive tariffs could once again ignite inflation and disrupt growth. At the same time, supporters argued that firm trade policies could strengthen American manufacturing and create long-term resilience. Companies like Tesla evaluated new domestic supply chains to reduce dependence on foreign components. Energy firms expanded production to serve a more inward-focused economy. Defense contractors benefited from increased government spending linked to national security priorities. But retailers, importers, and consumer goods companies braced for higher costs and shrinking margins. Every tariff announcement became a test of investor nerves and strategic patience. For long-term investors, the lesson was clear, because trade wars move markets faster than fundamentals. Short-term traders found opportunities and volatility, while retirement savers faced unpredictable swings. History showed that fear often pushes prices lower than reality justifies. History also showed that optimism can inflate bubbles that burst without warning. Through it all, the American worker stood at the center, hoping for stable jobs and rising wages. Manufacturing towns saw renewed hope, while farming communities endured painful uncertainty. The stock market became a mirror reflecting national ambition, political conflict, and economic risk. Behind every chart and index stood real families, real businesses, and real dreams. In boardrooms, executives debated whether to expand, wait, or retreat. In trading rooms, analysts tracked every tweet, speech, and policy hint for clues. In homes, families wondered if tomorrow would bring higher bills or better opportunities. This complex web of cause and effect revealed the true power of trade policy. Tariffs could act like medicine, healing certain wounds while causing painful side effects elsewhere. They could protect strategic industries while straining international relationships. They could inspire confidence or spark fear, depending on timing and execution. For investors, understanding this balance became essential. Diversification emerged as a shield against sudden policy shocks. Quality companies with strong balance sheets proved more resilient than speculative bets. Patience rewarded those who avoided panic selling during market storms. Research protected those who looked beyond headlines and into fundamentals. Risk management became not just a strategy, but a necessity. As America debated its future trade path, markets continued to price in hope, fear, and expectation. The story of tariffs was no longer just about steel and soybeans. It became a story about power, independence, and global leadership. It became a story about how political decisions rippled through every layer of the economy. And it became a story about how individual investors can either be crushed by uncertainty or strengthened by preparation. Because in every crisis, there is danger, but there is also opportunity. Those who learned to adapt found new paths to growth. Those who resisted change faced rising pressure. Those who stayed informed gained clarity. Those who ignored the signals paid the price. From Wall Street to Main Street, the tariff wars reshaped financial strategies and personal futures. They reminded the nation that economic policy is never abstract. It touches jobs, savings, retirement plans, and daily life. It decides which industries rise and which struggle. It shapes the legacy of leaders and the confidence of citizens. As the next chapter of America's trade story unfolds, investors stand once again at a crossroads. They must choose between fear and focus. They must decide between speculation and strategy. They must balance hope with caution. They must remember the lessons of the past while preparing for the risks of the future. Because in a world where one policy announcement can move trillions of dollars, awareness becomes the most valuable asset of all. So as tariff wars threaten to ignite once again, the ultimate question remains: will you let uncertainty control your money, or will you use knowledge to control your financial destiny?